Welcome to Value Added, the real estate podcast where we speak with the brightest minds in the world of real estate who provide, create, and realize value in an ever-changing market. If you're a real estate professional delivering value to your clients, an investor creating value not seen by others, or a busy professional who passively invests in real estate to grow the value of their hard-earned dollar, then you're in the right place. And now your host, Nick Walters.
Hey gang, welcome to another episode of Value Added, the real estate podcast. On today's show, we're chatting with JT Lynch. JT is from Denton, Texas. He works for Denton, Texas-based Ramey King Insurance. He is a risk manager and commercial insurance broker. Ramey King is an independent agency located in Denton. They've been around since 1881. They specialize in multifamily, commercial, retail, and rental property coverage. So without further ado, let's get on with the show. JT Lynch, welcome to the show. It's good to have you.
Thank you. Thanks for having me. Hopefully I can be a value add.
Definitely, most definitely. But first, I have to ask you, you got your Texas Tech flag behind you, guns up.
That's right.
If we have a season this year, how does Texas Tech look?
It's, you know what, every year it seems like everything's so promising and then it just falls apart. But this is a second year on a new coach, so hopefully things pan out the way we hope it. And so I see Mississippi State in the background. You've got Coach Leach now, is that right?
We have Coach Leach. It's
man.
We're either going to be really good, really bad, but I know that we're going to have the most interesting post-game interviews.
That's true. So, it'll be a lot of fun to watch. We miss Coach Leach a lot.
Yeah, no, we're excited. But anyway, let's jump into it. I want to hear more about your career and how you got to where you are today.
Sure. So obviously graduated from Texas Tech. I was a sales manager for a long time with a couple different companies, and I did door-to-door sales. So if you can do door-to-door sales, you can do anything, man, especially in Texas. And so, working there, a lot of late nights, a lot of weekends. And I got to a point, I was successful, making pretty good money. But I got to a point just thinking, this isn't worth it. I'm not seeing my family, I ended up trying to make a career change and get into insurance. I was half a step away from having my own insurance brokerage, and I had a meeting, and the numbers just didn't add up, right? I was super bummed out and depressed. I wanted to go home and just lay in my bed and just knock it out of it. That night, though, I had a networking event with a group of realtors, and so I decided, let's go. Let's see what this is all about. You never know. I ended up sitting down on a table, and my future boss sits right next to me. And so it's just, you got to look for the signs. You got to take advantage of every opportunity that you have. It could have been so easy for me to say, I'm just going to go home. This isn't working out. I'll figure something out later. But instead, no, I committed to this. Let's go. And here it is. I love my job. I love what I do, and hopefully I'll be here until I retire. So it's crazy how things work out like that.
So did you mention what sort of event you were at? Was it a real estate brokerage event?
Yeah. So I was doing personal lines for insurance for a little bit. So I networked with a lot of realtors. And so, yeah, it just happened to be just a bunch of realtors here in Denton at a local brewery here. And yeah, my boss, he likes to network with the realtors as much as he can as well. And, usually if someone else is in insurance that's there, I usually wouldn't even talk to him that much. But he sat down right next to me and we just started talking, and he asked about my career path and said, hey, we've got an opening. I think you'd like it. Give me a call tomorrow and we'll sit down and have a beer and discuss it. And then here I am.
The rest is history.
Exactly.
So let's talk about insurance. You're in the commercial insurance world.
That's right.
We met through multifamily contacts of ours. Insurance is something that is absolutely necessary while running a business. Right? It's the necessary evil, but nobody likes it. So tell us a little bit about the overarching insurance business and what future owner operators of commercial real estate can expect while they're kind of doing their due diligence with someone like you.
Sure. We've noticed lately that carriers are being a lot more picky. And so you really want to do your due diligence about the property. I've seen a lot of property owners and no faults of their own, they kind of get bogged down by the numbers. It's like their noses are stuck to the spreadsheet and they don't look at anything else. I'll often ask property owners when we're starting to look for quotes, how old is the roof? Oh, I have no idea. You're about to spend $10 million on this property. You ran all these numbers, but you don't even know how old the roof is. Is that going to make a huge difference in the long run? No, but if you were buying a new house, you'd probably know, right? And so little things like that. Carriers are looking more at the age of properties. They're looking to see, is there aluminum wiring present? There's a huge fire risk there. Also, the Federal Pacific stab lock panels. They don't like those, right? And so they're starting to really bog down on older properties, things that have some issues that need to be addressed. Because the fact is that they pay out claims, and when claims are made, premiums are going to go up. Someone's going to pay for it somewhere, and so that's really what we've seen lately. I know a lot of people always ask me why are premiums skyrocketing, and it's pretty simple. It's claims. Whenever there's especially a catastrophic event, hurricane, even in Dallas, a hailstorm comes through. There's really only so few carriers that write for multifamily that when a big storm comes through, they're not able to spread the risk like maybe your personal auto insurance would. So, your personal auto insurance, you could name 100 different carriers right now. And when a storm comes through, they're all spreading the risk amongst each other. But if there's only a handful of carriers that write multifamily, well, they're getting hit all at once. I wish there was a bigger explanation for the increase in premiums, but it really is. It's claims. It's more apartments being built every day and not more carriers willing to write them, basically.
So if I was in a market like my local market in Connecticut in the Northeast, and I am reaching out to someone like yourself who's going to go out to the market and look for the best possible quote that has the best possible coverage for my particular asset.
Right.
Why should I have to pay a premium, a higher risk premium for claims that were called in from a hurricane in Oklahoma or a flood in Miami? Why should why should my premium have to be determined by those outside factors?
Right. It doesn't seem fair, right? It doesn't seem fair until you're the complex that gets hit at the time and needs those funds in to pay the claims. So if you think of, the insurance carriers are going to have a pool of money. And that's set aside to be able to pay these claims. And whenever that pool gets smaller from an event, now they have less money to pay future claims. And so they need to offset that somewhere. And that is, unfortunately, higher premiums. However, you may get hit a little bit in Connecticut, but nowhere near owners would be, say, in Houston or Florida. Their premiums are going to skyrocket. Some carriers have actually decided, no, we're not going to write any coastal properties anymore. So you'd actually be a lot more protected. I don't. Do y'all get a ton of catastrophic storms there or hail? Probably not like Dallas.
Hurricane Sandy in 2012. Okay. So one of the largest hurricanes that has hit mainland U.S. in one of the largest ones in recent memory.
Okay.
So yeah, it happens, but we're not in Tornado Alley.
Right.
Also in more densely populated areas like New York City, where I do a lot of business, everything is built towards the sky.
Right.
So
Right.
all of the development is upward rather than outward. So uh, the flooding, especially
Yeah.
downtown Manhattan, once you get below 14th Street, going down towards into the financial district, uh, it's going to be underwater in the next 100 years,
Yeah.
or less.
Yeah.
And that's just the way that things are trending. And Hurricane Sandy back 8 years ago was a perfect example of that potential. I mean,
Yeah.
there were floating in the water in 20 feet of water in downtown Manhattan.
Yeah. It's
Uh,
crazy. It's like with the perfect storm, or whatever that movie was. But yeah, and so you can see, if you own an insurance company, you're going to want to, watch your risks, right? You're still a business. You've got to make sure that you can cover these claims as they come in. I know a lot of people, and even me before I got in this industry, you just think that, insurance companies are so greedy. They do get claims and they do pay out, and they have to cover themselves to make sure that they can cover for future claims.
So for multifamily operators that are underwriting deals on a per door or per unit basis, let's say, what were these underwriters or these operators, what were they underwriting on a per door basis a year ago versus now?
It's changed. So it's going to be different in every area, but it has changed a whole lot. An area like Phoenix is going to be so few risks out in Phoenix, compared to, Connecticut, Houston, things like that. But it has changed. It's gone up. Man, I remember deals that were 180 a door, 250 a door. And we just underwrote one today in the Houston area that was 500 plus a door. Like I said, the carriers are getting pickier. There's not more that are coming in to write it. And they're just trying to watch their back. We have a program carrier that was our go-to for a long time. And probably 6 months ago, they said, in the DFW area, we are not writing anything that is older than 1990. And so that limits us a little bit. Their premiums are still great if you have a newer property in this area, but now we have to go to some other carriers that maybe weren't as good, which have a little bit higher premiums. And so, but everybody feels that. And, it'll come back around again. Once that pool gets bigger again, it'll start coming back around again. But like I said, more and more apartments are being built, but not many more carriers are coming on board to take over that risk.
What percentage of claims that are filed are either covered or not granted? Do you have any sort of visibility on that, claims versus payouts?
No, I really don't. I can get you those stats later. When it comes to something obvious, they're going to cover it. They want to make sure to be in the client's good graces. But I hear about apartment owners trying to claim all sorts of stuff. Hey, my staircase is a little old and it's falling apart. Can I claim that on my insurance? It's like, no, normal wear and tear, that's on you. You got to keep it maintained. So I wouldn't be surprised if claims versus payouts is much higher, just because there are some claims that, that's probably not a claim you should make, right? But as a brokerage, what we would say, don't call the carrier, call us and discuss the situation with us. Even if it is a valid claim, I might say, you know what? You can make a claim on it, but your deductible is $10,000. The gate that the guy ran into and broke it is going to cost you $5,000 to fix. Just fix it on your own, right? So as a brokerage, we always tell our clients, let us know first, and then we'll discuss with you your options about those claims.
So an owner operator approaches you, and they're in the due diligence phase, or maybe they've just engaged on an LOI for let's just call it a 200 unit Class C value add property in let's just call it the Southeast.
Okay.
they're going to contact you. I want you to just, very, very top level, walk us through the questions that you would ask, or the kind of the needs assessment that would allow you to then go out to the market to place the best policy possible for this operator.
Right. So at our branch, we do things a little bit different than a lot of other agents that I've heard of, at least, will do it. What I want to do is I want to be a part of your team as you start looking for properties. And what I mean by that is when you go to look at a property that you're submitting an LOI on, and you think that this is something you want to pursue, send me an email. Send me the T12, the rent roll, the offering memorandum if you have it. And what I'll do is I'll do a free indication for you of what the insurance should run. Usually I can get it within about $5,000. And that will give you a better idea of what your insurance costs are going to be going into it. And then once you submit an LOI, you've already got, you get accepted. It's under contract. We're already halfway there. Then what I'm going to ask you for is when the last time updates were made to the roof, your HVAC system, your plumbing, wiring. What type of wiring is it? We know if it's a 1960s, late 1970s, there's a good chance there's aluminum wiring present. We're going to want to know 5 years of loss history. So we're going to have to get with the seller, and they're going to have to get with their insurance carrier to send us the past 5 years of loss runs. And that'll tell us what kind of losses were there. And that's going to affect the premium as well. And of course, there's a lot of things that I can find out on my own. Is there a pool present? What type of, is it a gated area? Has there been a ton of crime in that area? Things like that. And then what we do is we gather up all that information, and then we take it to our carriers. Our placing agents they're great. What they do is they've got a relationship with all these underwriters at these carriers, and then they're going to go to them and basically shop it. Some carriers, like I mentioned before, we might not even try because it's a 1972, Class C, and they've already told us, nope, they only do 1990 and above, so we won't even try. But depending on the situation, depends on which carriers we go to. But we try to go to as many different options as we can to get you not just the lowest premium, but the best coverage options as well. I know that in the DFW area, 2% wind and hail deductible is pretty much standard nowadays. But we can get deductible buy downs. So you spend a little bit more on a premium to buy that down to maybe 1% or a flat $10,000 or whatever. And so that different carriers are willing to do different things. And because this landscape is changing every day, we're even getting more creative. Maybe we get the general liability at one carrier, property at another, an umbrella through another carrier. And we try to mix and match it to give you the best options possible.
Let's talk about amenities for a second. So you have a building that has a pool, has a dog park, has walking trails, has a fitness center, a lounge. How are those additional amenities factored into the overall premium that an operator is going to see?
It is going to take. It is going to increase premium. However, it's kind of a double-edged sword. So you have maybe a pool, right? That pool is obviously higher risk because of drownings and other accidents. But what we look at is there a fence around it? Does the gate close by itself? Are there pool rules posted? Is there safety equipment there? Is it well maintained? That's going to make a huge difference. But then also, we know that certain amenities, like you spoke of, are going to attract more residents there, which leads to a higher percent occupancy, which carriers we like as well, right? And so it's kind of a give and take. I know one carrier question that they're going to ask is there like a gym on site, right? Say yes. Okay. Is there free weights in there? No. Okay. Well, that's different. A treadmill is going to have a lot lower risk than if there's a bunch of free weights in there that someone could get hurt on. So it will affect it, but it also sometimes it's in a good way as well.
Take me through a recent deal that you can remember where maybe you were competing with another broker who was, the operator was out shopping deals. Tell me a recent deal that you provided additional value to get something across the finish line and won the business that you were fighting for.
Sure. What sets our branch apart from other agencies is it's all about networking and relationship building. Before COVID, we were going to different networking events 3 or 4 times a week. It's really hard not to be able to go to those events anymore. Luckily, we're going to Brad Sumrock's this Saturday, so we'll be vendors there. It'll be interesting to see how the turnout is, but I'm excited to get back in the swing of it. But by meeting people face to face makes a big difference. One of the first accounts that we wrote this year, it was a client that I met at a Brad Sumrock event. It was their first deal that they were going through, and I offered to go and walk the apartment complex with them during their due diligence. I had met them before, but this allowed me to spend a couple hours with them and learn more about them and their family on a more personal level. It allowed them to get more trust in me, and they knew that, all right, he's the right person. We can trust what he's going to do. They've been doing this for 35 years. It was the smoothest flowing acquisition that I think I've ever had, just because of that trust. And we got to a point where we were texting back and forth, more like friends than clients. And when you have that sort of trust, it makes all the difference, So I think that value add, I guess, is what separates us from other agencies out there.
And through that, I'm sure you have a huge referral network where a lot of your business is being generated from current clients of yours.
Absolutely. One of the things that I try to do, I want to invest myself. Right now, things are a little bit tricky. I just moved, but my goal is still to invest in a property this year, probably passively. But because we're so involved in networking, because we have such a large network, I want to help out as much as I can. I will always reach out to someone asking them what kind of properties they're looking for, what size, what class, what areas they're looking for. And I've always got clients that are looking to sell properties too. So I'm always trying to introduce one or the other. Ultimately, I would love to have their business, but if you stay in the game and keep those relationships going, I won't have to ask and beg for your business, and it'll just come naturally. And I feel like that's really the best way to market myself and our branch, is just to stay in the game, make sure everybody knows that we're more than just insurance guys. We're actually there to help you out along the way as much as possible, and not just networking with investors. You think about all the lawyers, CPAs, construction guys, you name it, water conservation. I always tell people, call me, even if you chose someone else for their insurance. If you need a recommendation, call me. I've got a whole list and stack of business cards with other people we network with that would be happy to help you out.
Are there any particular markets? You're based in Texas.
Mm-hmm.
Are there any particular markets that you particularly, or maybe Ramey King overall, are your business is more concentrated? Any particular markets or states?
Yeah, DFW is really where most of our clients come from. We can write anywhere in the United States, but because I think we're here and most of the networking events we go to are here, that's where most of our business comes from. And people, I had a client call me from New York probably 4 months ago. Didn't really know anything about DFW, but knew it was booming here, and said, I got to get in this. How do I do this? Who should I contact? What kind of properties should I look for, and things like that. So I think the fact that we're in DFW, networking in DFW, and it's just booming like crazy here, and it still is. We've got a lot of deals going on right now even. I think that kind kind of puts us in a corner, but a good corner to be in, that's for sure.
We're going to close out this episode with the hard-hitting questions. These are the questions that we ask every one of our guests. First off is, what is your why, JT?
Easy. Family.
One word. I like it. What is a recent book that you've read, or maybe a podcast or an audiobook that has provided significant value to your life or your career?
So I love everything from Patrick Lencioni. But however, How to Win Friends and Influence People is probably the best. It's, and I hate the title because it seems like it's for introverted people that are trying to trick people into selling them something, but it's really not. It's really about relationship building and how you can help someone else out, and then in turn they want to help you. So I use that on a daily basis for sure.
How do you like to pay it forward?
Pay it forward. Just like I said before, I want to be able to connect you with other people that might be able to help you out. I want to be able to just be a part of your team. And I'm genuinely happy for you when you get your deal, because I know how hard it is and how frustrating it is when numbers don't quite add up, when this property submitted an LOI on, somehow, you thought you were going out of your way to make this huge bid and it wasn't enough. I know how much work goes into it. So I try to do whatever I can to make it a little bit easier for my clients and future investors.
What's the best piece of advice that you would give your 20 or 21-year-old postgraduate self now?
This is a good one, and I wish I had this. Don't be afraid to pursue happiness. When I first graduated, I got a job, doing very well, working my way up. But I got to a point where I just dreaded going into the office. I dreaded it. But I was so scared of leaving and not finding something else. Or what if you found something worse, right? You can't do that. Be confident in you. Find something that you like. And it's out there. Find someone that values what you can bring to the company. It's not worth it to you and your health or your family to be miserable every day, right? So go out, find what you want to do. It's there. Be confident in it and go for it.
JT Lynch, thank you so much for the time. Very grateful for the 30 minutes that we were able to sit down today. And thank you for adding your value today.
Yeah, thank you. I really appreciate it. That was fun.
Thanks for listening. If you enjoyed this episode, please make sure to leave a rating and a review, which will help us introduce the podcast to other listeners. Also, don't forget to subscribe to our YouTube channel, which will give you access to other episodes you may have missed. Lastly, if you'd like to learn more about investing alongside us, then head on over to valueaddedpodcast.com. Have a great day, and we'll talk to you next week.